Can you borrow from variable life insurance cash value? Imagine having a financial safety net that you can tap into whenever you need it. That's what borrowing from your variable life insurance cash value can offer. Variable life insurance is a type of permanent policy that combines a death benefit with a cash value account. The cash value is invested in sub-accounts, which can grow over time and offer tax-deferred growth. Once your cash value has built up enough, you can borrow against it. The amount you can borrow depends on your policy's cash value and the insurer's rules. Usually, you can borrow up to about 90 to 95% of the cash value. But keep in mind, the exact limit varies by company and your policy size. When you take out a loan, it acts like a loan from a bank. The cash value serves as collateral, and the loan accrues interest. The interest rate is typically lower than traditional loans, making it a flexible option. You're not required to pay back the loan on a set schedule, but unpaid loans and interest will reduce the death benefit paid to your beneficiaries. The good news is that loans against your cash value are generally tax-free as long as your policy stays in force. If the policy lapses with an outstanding loan, though, the borrowed amount could become taxable. That's why it's important to manage the loan carefully. Borrowing from your policy can be useful for emergencies, education costs, or other financial needs. You don't need to go through a credit check or fill out lengthy paperwork like with traditional loans. It's quick access to funds, which can be a real advantage. However, there are risks. Borrowing reduces the death benefit, and if the loan plus interest exceeds the cash value, your policy could lapse. This would mean losing the life insurance coverage you're relying on. So, it's essential to keep track of your loans and interest to avoid unintended lapses. In summary, you can borrow from the cash value of a variable life insurance policy once enough has accumulated. It offers a flexible, tax-advantaged way to access funds, but it requires careful management. Understanding how loans work within your policy helps you use this feature responsibly and keep your life insurance benefits intact.